Understanding advanced market structure took my trading to a whole new level. My goal is to teach you advanced market structure so you can take your trading to the next level, whether you be a beginner and you just want to reach profitability, or you're already profitable and you're ready to take your trading to the next level. Either way, this video will help you in your trading goals. Let's get right into it. We're going to go over the intermediate term high and low. We'll break this down in a quick little couple slides, and then we'll head into the charts, get right into it, live trading, because that's how I do it. You may have seen other traders posting and putting ITL below lows and ITH above highs. So what does that stand for? That stands for intermediate term highs and lows. These are going to be lows that fill a imbalance. That can be a fair value gap, volume imbalance gap, some kind of inefficiency or imbalance in price. I'm going to be walking you through and breaking down advanced market structure. For success, it's important that you are a participant of this video and not just a viewer. So go ahead and pause it, and then I want you to go to February 6th at 1 p.m., pull up the charts, get a notepad and do this with me. It will greatly increase your chances of success. I think it is imperative that I teach in a live market setting for a couple different reasons. Number one is that reactions to price and the way price moves is a huge part of price action trading. Part two is understanding that I'm trading for real. This is not a demo account. This is not a game to me. It is dead serious because this is my living, and I want you guys to be able to quit your jobs too. And for you to take what I'm saying serious, you need to see me pulling money out the market with it, using it, implementing it, and shining with it. Therefore, you will be much more likely to go into the charts, use it yourself, and change your life. So with that being said, let's get started with intermediate term highs and lows. Intermediate term highs and lows, what are they? And how do you identify them? And then how do you implement them into your trading? Example is right here. Price came up, came back down. You have a fair value gap here. When price comes back down into these fair value gaps and then moves away from it, that is your ITL. Price came up into this little bearish fair value gap before it retraced into here. So make that what? An intermediate term high. Now that you understand how to identify them, what can they do for you in your trading? Have you guys tried to use market structure shifts on lower time frames and been like, damn, they just don't work for shit? I know I have. This is where you can use these intermediate term highs and lows as market structure shifts because they are quite accurate on the lower time frames. I have an intermediate term low here. These lows are going to be protected. I use them to identify the trend in the market. If this is an intermediate term low and then price moves up and comes back down and this acts as support as it did, we're to draw out this intermediate term order block, which we'll get into that a little bit later. We need to talk about internal and external range liquidity. Without it, it's going to leave you missing a major concept in the foundation of understanding ICT concepts at a high level, because you can have higher highs and lower lows inside of a higher high and a lower low. So the most outside higher high and lower low are going to be your external range liquidity. That is the easiest, most simplest way I've came up with explaining it. So external range liquidity, which people just use the abbreviation ERL. And then this lower, the lowest low here would be your external range liquidity. So from here to here, that's your external range liquidity. Everything else inside of here is your internal range liquidity. All right, so I want to show you guys something. So you see how price came into this fair value gap and it's left it. This is now an intermediate term high. We want to see how price reacts to this high now. Does it break it? Does it reject from it? Or does it just go through it like butter? That's it. I'm going to take one off there. See how price went into it. Closed outside of it even. That's even better. Does this make me want to get out of my bullish position? A little bit, yeah, but we're gonna wait and see how price reacts here. Is it able to push through it, or is it going to get rejected? But I can just tell, like, something in my gut tells me it's going to go up. I'm not sure what that is. Something in the price action. My brain is able to identify. If you watch the charts enough, you'll eventually get to the same point. This is a super bullish thing that's happening right now. The fact that price came into this multiple times with multiple candles, and then now it's pushing up. This is extremely bullish. This is a good example of an intermediate term market structure shift. This is something I came up with. I think they're just now starting to catch on to it. I saw TT Trades post about intermediate term order blocks, which I introduced well over a year ago now. They're finally starting to catch on, see what I saw long ago. Not to sound cocky, but I'm just one step ahead. Price has moved back up, closed outside of this here, creating now support. Flip this, now take it up into here. It's gonna go like this, like that. See how in a 3-minute we just had another intermediate term market structure shift here. This high filled that fair value gap. Boom, intermediate term market structure shift, the bullish one. This is some of the nuances that if I wasn't doing this in a live market trading, it's how price is moving and reacting to these areas that tell us the information we need. If it's going to make an intermediate term high, that then will act as a resistance for lower price action, or if it's going to continue up to our external range liquidity. This high to low is my external range liquidity. Everything within here to here is external range liquidity. So these highs and lows inside of this are going to be expected to be broken and used to create and induce traders to buy and sell and put stops above and below these highs and lows. And then we should expect them to get a rate on them pretty easily. Sorry, price is coming up to my blue line there. That was my target. Go and exit one more there. I only need $100 more here to pass this evaluation with Top Step. Hopefully it just pushes up into this last little fair value gap here and then rejects. We know that this is external range liquidity and it should not be broken easily. That helps us, right? Actually, this is external range liquidity. I didn't see this before. Let's check my balance real quick. So there we go. Boom. Evaluation passed. Oh, fuck. I went over the 1500s. I'm gonna have to trade on this again tomorrow. Okay, so price did exactly what I thought it would have. Come up in here, create a new intermediate term high, is now moving down. Let's go to a hour chart here. See here what's going on, right? So you had your external range liquidity here. Price came up and tapped it, but did not take out that high because you're creating liquidity here. You should not expect to see that broken. External range liquidity. Price then came down and did not take it out, setting a trap. They're building up stops here. People are putting their stop losses here going long. People are putting their stop losses here going short. So when they want to break this range, they're going to run one side of it and then attack the other side. Which way do they do that? They probably do it this way. They probably break this low and then up. All right, next up is intermediate term order blocks. This is something that I also came up with about a year ago and started sharing publicly about 6 months ago, somewhere around there, I'd say. I call it the ITOB, and there's one that price just rejected off of right now. If we look at this price action, right, we look at this right here, price came into this fair value gap right here, this bearish fair value gap. Price came into it and then left it, right? In that last candle, before that move down out of that fair value gap, is going to be an intermediate term order block. It's an intermediate term high, which then we should trust until proven wrong. Therefore, it makes sense that these are like the ultimate order blocks. Like the order blocks, obviously they don't work 100% of the time, nothing does, but depending on the time frame you're on, they are very high win rate. On the 1 minute, can be on certain days. If price is going to continue lower, this intermediate term high will not be broken. If it is going to continue higher, it will break it with some oomph right now. And this is also why live trading is very important in teaching you while the market's moving, because you need to see that they don't all work. When you're being taught with a dead market, you're only being shown examples that work. Very rarely is someone going to be like, hey, I'm going to teach you this thing, but I'm going to show you examples where it doesn't work. They just don't do that very often. It appears it's going to work here. I'm going to take one off as it breaks that low. Okay. So let's find another example of an intermediate term order block. Price came down. That's your intermediate term order block right there. And then price dipped right down to it, offered support, and then moved up. That is a beautiful example of an intermediate term order block there. All right, so this is a little bit later in the day. I'm about to be taking a trade. I want to explain to you how I'm going to go about it, looking at the market structure and the external and internal liquidity. What is taking place here? Prices came down, tested that once, moved on up. This is also an intermediate term low. You have a channel that is taking place here, a beautiful one actually. We're at the channel low now. 1, 2, 3 touches. Usually doesn't fail until the 1, 2, 3. Usually doesn't fail until the 5th touch. 1, 2. This is your 3rd push. That's failed to go lower. Beautiful. Trade's working out fantastic. I'm gonna go ahead and add on to this here. Okay, it's ripping on up. So right here is my target. There's a little volume imbalance here, but it's already going through it. Of this evaluation I passed today, $1,700. I want to trade this one. So I'm up 600. So I can pass this one today pretty easily too. Put my trade there. Stop goes below there. I just want to go back. I just wanted to add into that real quick. So volume imbalance there. See how it's not closing above it at all? It's not good. I'm gonna go and exit there. I'm sure it will still go up here to there, but I just want to exit for the sake of it. All right, so there was the trade I took. I just want to show you guys what I was looking at in my thinking process around it using the external range liquidity, high and low. If this is our external range liquidity, which I think that this is right here, it's a stair stepping its way up. This offered support. This then should offer support. Big channel, external range liquidity. You know, they're building in a range here for the next leg up. I am a funded trader. That's what you call me. I use other people's capital to trade with. There are a lot of shady companies in this industry, and when I was coming up, I dealt with a lot of them. So I started my website, verifiedfundingcompanies.com. When I first started trading in prop firms, I went through a lot of them, right? Some good, some bad. The ones that I found are good. I put them on a website for you guys, and I offer the best discounts. So to get funding, you have to pay for it. It's not, they're not going to hand you money for free, right? So if you come to my discount page here, you can see all the discounts that are available with the funding companies. All of these funding companies, I 100% guarantee that they'll pay you out. If they don't, I will. I trust them. There's Apex Trader Funding, Bullnox, Take Profit Trader, Top Step, Trade Day, and then last but not least is Tick Tick Trader. They all have a unique angle on their funding that is different from everyone else's. Check out my website. I'll put the link in the description.